In this video, we're going to learn about support and resistance. This is a crucial part of the training. We use this as a foundation for our analysis. You need to know what support and resistance is. Support and resistance alone will help you predict the right way that price is going. And so this video is important for that reason. At the end of the video, we're going to check in on our trade idea, the Euro USD trade idea that we did at the beginning of the course, and see how support and resistance is affecting this trade. All right, let's get going with the video. So we're going to keep building upon these lessons. So now we're into support and resistance. And support and resistance is going to be very key and foundational for you going forward. So I'm excited I love support and resistance. I trade support and resistance to this day. We trade a lot of different things, but nothing trumps support and resistance. So this is going to be an important piece right here. We talked about uptrend. We're aware of uptrends. It goes up, creates that high, then the low, then it creates a higher low, a lower high, higher low, lower high. And I hear it both ways. I hear you can call it a higher low or a lower high. So higher high, higher low, higher high, higher low, higher high, higher low. With that, that's basically what we're saying when we do that. Is we're looking at support and resistance levels. And so as price pushes up, it hits a ceiling. And that ceiling creates a peak, but that ceiling is resistance. It has downward pressure that's coming right there at resistance. And then when it goes to the higher low, it's reached a floor where it's a support level. And so when price comes up here, or when price comes down here, that support, there's a bounce. It bounces off resistance to the downside, bounces off support to the upside. And you'll see those bounces that occur on the uptrend. All right. So a very simple thing to do is to sell at resistance and buy at support. When you identify the trend and you're at support, it's pushing up, price is right here, just broke the last resistance. It broke that and it's headed up. You're looking for where it's going to head up to. You're looking for the next level of resistance. So there's the resistance, and price starts to do the bulls start showing signs of exhaustion. We're exhausted up here. We can't push up any higher. We're trying to close above this and we can't. That's a good place to sell. And so we sell at resistance and it falls until it reaches support. Right? And then at support, the bears will show signs of exhaustion that we can't close below this level. So we buy there. We go long and we enter positions here and take it up to the next level of resistance. Does this concept make sense to everyone?
Yes.
All right.
Yes.
Great. All right. So on a downtrend, it's the same thing where we have a high and that high will come down to support. It'll hit support. And if that support is strong enough, price will bounce off of that because that's the floor. It bounces and it bounces up to the ceiling and hits resistance. When it gets up here, the same thing, bulls will show signs of exhaustion and it falls down. And what do? We sell at resistance and we buy at support. So we do the same thing in the downtrend, is that we find levels of support and resistance to buy and sell off of. All right, but price also moves sideways. When price moves sideways, it's in a range. And so it doesn't create a high or a low, but we can identify the range and we can sell when it's at the top of the range and we can buy when it's at the bottom of the range. So in all three scenarios, up, down, and sideways, we have the ability to buy and sell, to enter in, buy and sell positions. We're making money. In any direction the market goes, we're making money. But we're careful that we're not selling in and buying in the middle. We're waiting for the exhaustion to happen, wait till it's there, and then we're just catching it from one peak to the next peak. In every scenario, one peak to the next peak. On the uptrend, one peak to the next peak. So that becomes, when I learned that, I was like, oh, that's cool. I like that. Like, that's very simple. I could just identify it. And so that's what I want you to do for homework today is identify trends in TradingView. And we'll go through that at the end, but I want you to identify trends. All right, we're going to take a quick break and we're going to check in on our trade, see how we're doing. Let's check in on it. All right, we're up $13,500 right now on the trade. So as I'm teaching, this is semi-passive income. The position is in and the money is working for me right now. So we're losing money on the US UJ trade, but we're making money on the USD ZAR trade. And I did not have to do anything. I entered into the position and it's running for me. So right now we're just above $13,000. Within 24 hours, we made $13,000 on 2 trades. All right. And so the reason why that's important is because when you look at this, once you enter the trade, you don't have to do the work to push it up here. There's nothing that you can do. Once you identify the support and resistance, there's nothing for you to do. So you staring at the chart is not going to make price move there. Or you standing and just staring at price move is not going to help it at all. You looking at the news and seeing what's going on is not going to help it. So you're going to have to find something to do with your time. And that's something that people have to get used to when they're trading, is that they're used to working in lieu of having their money work for them. And so a lot of times people aren't profitable as traders because they're hovering over the trade and they're closing it and then opening up a new one and then closing it and open up a new one in lieu of letting the structure work. This is the structure. It's support and it's going to go to resistance. Let it go. Don't stop it. Like, oh, it's going up there. I'm going to close it right here and close it. Let it go from support to resistance. And we're not going to talk about it today. I think we talk about it Thursday of why that's important. We're going to talk about risk management and how we make money through profitability or probability, and how to manage these trades correctly. But we got to grasp the concept. All right, let's keep building. Let's keep building. So let's talk about this uptrend. Let's look at this a little bit more. So we talked about higher highs and higher lows in the uptrend. What happens, what another characteristic is that when the higher high is created, price will come down and create the higher low. And then it will push up and it will break the previous higher high and go higher. But price will then come back and retest the previous peak. And so old resistance turns into new support. That's a characteristic of the uptrend, that old resistance turns into support once it is broken. So that's big for us, because if we miss this move here, we can wait for this old resistance level to be tested and get back in on the move. So it breaks that old support, comes back, retest it. That's old resistance turned new support. We can enter here and keep going up. Right? And that's called a break and retest of structure. We want to trade either the break or the retest. So if we're here and price breaks, more than likely it's going to retest. Now the retest, there's no certain time when the retest is going to happen. So that could happen instantly, where it breaks and for a second it just comes back, taps that area, and then keeps going. Or it could just keep going, and then a couple of days later comes back and retests that area, and then keeps going. But we look for those in the market, a break and retest, where old resistance becomes new support. Let's look at it from a downtrend perspective. We're going down, we have a floor, so that becomes support. Then we go up, we retrace, create the lower high, and then we break that old support and create a lower low. Now, that old support now becomes resistance. So now it comes back and we retest that resistance. And if it can't close above there, we take the sell right at that resistance because it's coming lower. And so we trade the retest. It's like we broke support here. Now we're coming back to retest that support. Oh, it's resistance now. Old support, turn resistance, and then it keeps going back down. All right, and so we see this over and over in the market. So let's look at it right here. We have a support level, and it hits the resistance kind of going sideways. So a support comes up, hits resistance, comes back down, support. That's a double bottom. It can't close below this support. It's strong when it's tested multiple times. So this has been tested multiple times. It couldn't close, and it goes, and what does it do? It breaks resistance. Where it couldn't close above before, it breaks that. And what does it do? This candle comes down and retest it multiple times. We come up, and what do? We retest that resistance area. So price comes back down, we retest it. That's a great place to get in and take it to the upside. Then price pulls back. That's now resistance. It's been tested multiple times, comes to support. Then we break it. Now, once we break this resistance, we break it. What do? We come right back down and retest it. And then we keep going to the upside. You can see it on the opposite direction. We go sideways. This is support. So we hit resistance. We come down, hit support here, go back up, hit resistance. Then we break the support. It comes down further. What do? We come back up and retest this support area. We retest it right here. And then what do? We come back down. Right. And so we identify support and resistance in the market because we are able to trade that on any time frame. All right. So we call this minor resistance when it's only tested. It's not tested too often. We call it major when it's multiple touches on that horizontal level. Right. So we talked a lot about horizontal support and resistance. Now we're going to talk about diagonal support and resistance, because you're not going to get resistance from just horizontal lines. So let's look at diagonal support and resistance. On trends, the trend line is a diagonal support and resistance. So you're going to have support from the highs to the lows. That trend line will act as diagonal support, or another term for it is diagonal, or dynamic support and resistance. It's non-horizontal. So it's just on a trend. You will find these trends where it's constantly being supported. In bearish markets, you're going to find diagonal support, where you're going to find some kind of resistance that hits there constantly. So if I go back to my previous example, if I drew a trend line here on the bottom of price action, you'll see that price is hitting that, and that's acting as diagonal support to continue the up move. Same thing when you find it going down. You can draw a trend line and find that every time it hits that, it goes down. Right, so that's diagonal support. Right, and you'll see that often in the charts. Now, I'm drawing lines. We're going to jump to a live chart, but I'm drawing lines that are perfect. So this is lining up. It's perfect. It's not always perfect in the market, but when you do find it perfect, it's when it's a strong trend. And you get higher highs, higher lows. But oftentimes you're going to get consistent higher lows, but you may get random highs. So this one may push up and stay lower and then push up higher, then stay lower for a little bit and then push up higher. It's still an uptrend because it has the higher lows, but you'll have to get used to seeing the trend in action. And the more what we call chart time, the more that you get chart time, the more you'll just automatically, your eyes will see it. All right, so you'll also see in the diagonal that it'll move into a channel. So when it's an uptrend, when it's a strong uptrend, it not only can you draw a trend line from the bottom, but you also can draw it from the top. And with the bears, usually we draw it from the top, but you can also draw it from the bottom, because what price is doing is hitting those top and bottom trend lines on its way up. So you can see it here where we come up, hit the top, we come back down, hit the bottom, come back up, down, and then up. Then we break that, and we can see that channel occurring, that it's moving within these channels. All right, so that's important to identify. I'm going to flip over to the live chart on TradingView, and we're just going to get some charting time in, and so you can see this in real time.